Welcome to The Explainer. Today, we're digging into a surprising real estate gold rush happening right now in Northeast Oklahoma. But what the data shows isn't just some simple land grab. No, this market is actually split in two, creating two totally different playbooks for investors. So let's break down which path might be the right one for you. So you've got to be asking, what's behind this sudden explosion of interest in the Sooner State? Well, it's not just one thing, but the whole story really kicks off with a massive, and I mean massive, wave of new people moving in. Get this. According to U-Haul's Growth Index, Oklahoma is now the 11th fastest growing state in the entire country. But the crazy part is, it jumped 30 spots in just 1 year. That isn't just growth, folks. That is an absolute population boom, and it's driven by people searching for a lower cost of living and a better quality of life. But here's where it gets really interesting for an investor. You can see it right here in the numbers. The population growth is actually outpacing the new houses being built. You see that gap between the two? That right there, that's the classic supply and demand imbalance that creates a huge opportunity. But that opportunity, it isn't just one single straightforward path. The market has actually fractured, creating what you could call a tale of two markets. This split presents a classic choice in strategy. And, figuring out which pot to take is everything. On one side, you've got what you might call the blue chip stock approach. This is all about safe, steady, long-term growth. Then on the other side, you have the startup investment play. This is a strategy focused on finding deals, adding value, and generating high cash flow and quick returns. We're talking two totally different investor personalities with two very different goals. All right, let's dive into that first path, the steady appreciation play. Think of this as the sleep well at night strategy. It's all about zeroing in on those affluent, proven suburbs where growth is predictable and your capital is going to be secure. Bixby is the absolute poster child for this strategy. I mean, look at these numbers. You've got incredible growth, super high household incomes, and a population packed with educated families. When you mix all those ingredients together, you get this intense, stable demand for high-quality housing. That's what makes it a premier safe haven for building equity over the long haul. And this quote, well, it just nails the whole philosophy behind this path, doesn't it? The goal here isn't about making a quick buck on a flip. It's about planting your capital in really fertile ground and just watching it grow securely over time. It's about building that generational wealth. Now, for all you investors out there who like a little more action, let's shift gears and check out the second path, the high cash flow play. This is a much more high-energy strategy, and it's all about finding hidden value in up-and-coming markets where you can get in there and actively create your own profit. So how in the world do you find these hidden gems? Well, the key is to look for a very specific signal in the sales data. Market analysts call it a velocity anomaly. Now that sounds fancy, but it's basically just a speed difference in the market that tells you exactly what buyers are desperate to find. Okay, let's use Sand Springs as our case study here. If you look at all the homes on the market, the good, the bad, the ugly, the median time it takes to sell one is about 45 days. That's our baseline. But, and this is the crucial part, when you filter that down and look only at the high quality, updated, totally move-in ready homes, they go under contract in just 25 days. That is a huge difference. That 20-day gap, that is the whole game. It's like a flashing neon sign from the market telling you that buyers will pay a premium and act incredibly fast for a finished product. This lets flippers get in, do the work, and get their capital back out with a nice profit in a really short amount of time. So, what we have here are two powerful but very different strategies. One is safe and steady. The other is fast and profitable. So the obvious question is, how can you combine them? How do you create a balanced, effective blueprint for this unique market? Well, the answer lies in something called the Siloam Springs model. It's a really brilliant strategy that basically takes advantage of the price difference between Oklahoma's affordable border towns and the massive job market right across the state line in Northwest Arkansas. You're essentially getting all the benefits of a huge economic engine without having to pay those high prices. And this model gives us a crystal clear investment matrix. You can see right here how it perfectly matches the property type to the market and the financial goal. So if you want long-term appreciation, you target single-family homes in a place like Bixby. But if you want a high profit margin and you want it quick, you're fixin' and flippin' in Sand Springs. It's a complete blueprint. So this all brings us to the final and maybe the most important actionable takeaway from all of this analysis. How should you, as an investor, actually allocate your capital to build a balanced portfolio that really captures the best of both of these worlds? The recommendation from market analysts boils down to a 60-40 split. You put 60% of your capital in those blue-chip suburbs like Bixby for safe, long-term growth. That's your defense. The other 40%? That's your offense. You deploy that in the value-add zones like Sand Springs to generate that immediate cash flow and those faster returns. So we end on this crucial point. The question is no longer if or even where to invest in Northeast Oklahoma. Now that you've seen both paths laid out, the real question is, which type of investor are you? Are you playing the long game for safety, or are you chasing that high yield? Your answer to that question determines your path forward.